Taxes on investments and capital gains. What do you have to know about it? And how are capital gains and, for example, cryptocurrencies taxed in Germany? So let's dive into it and welcome back to another video here on G-Tax. My name is Roland Elias and I'm a German tax advisor. And yeah, most of the foreign people who come to Germany, for example, as expats, students or something like this, they have, for example, investments and capital gains in Germany or abroad and now have to tax it in Germany. Because, first of all, if you move to Germany and have capital gains from abroad, for example, from owning an S&P 500 ETF or something like this, and then if you live longer than 183 days in Germany, then you have to tax them in Germany. Then the German tax code will be activated. But what is the capital gain tax, the so-called Abgeltungsteuer, and what do you have to know about it? The capital gains tax is a flat 25% tax on most investment incomes. In the case, it says up to 25% because the maximum taxation on capital invests and investment income are 25%. But if your personal income tax is lower, then the lower percentage will be used. Plus, on every capital gains from Germany, there will be added 5.5% solidarity surcharge. That means we are up to 26.375% in total, and church tax if it's applicable for you. This applies to almost all kinds of capital gains like interests, dividends, and normal capital gains, for example, stock changes and anything. The big point is if you have a German bank or a German broker or something like this, then the capital gain tax will be withheld automatically. That means you don't have to do anything about it. The German broker, for example, Sparkasse, Hypovereinsbank, Deutsche Bank or something like this, withheld the tax and just move it over to the local tax office. But there are some specialties if you have a broker from abroad, for example, Interactive Brokers, or if you have a Goldman Sachs bank account or something like this, for example, like an American US bank or something like this, then you have to declare it manually and then you have to do it. Then this means you're not free to choose, I want to do a tax return or I don't want to. No, if you have a foreign platform, then you are required to do a manually tax declaration. And then there are some specialties, for example, in Germany, each person has a 1,000 euro tax-free allowance, so-called Freistellungsauftrag in 2025. Couples who filing jointly can apply for 2,000 euros. And, for example, capital losses can offset gains. That means your tax burden will be reduced, but there are some specialties with the summing up of the losses. So this is a specialty. There, and the next cases, and this is very important because as a foreigner, you might not know it, in Germany, there's no specialty for long-term holding, does not create exemptions. That means in other countries, you almost have it, for example, you're holding it for 10 years or you're holding it for 1 year, then it's tax-free and you don't have to do anything about it. In Germany, this has been changed in 2009. That means in 2025, you have to declare and tax all of your income. For example, you trade in daily or you trade in over a decade. That doesn't make a difference. The next thing is you have to report your investment income in Germany with the withhold tax and the report tax automatically. There you use the Anlage KAP, that means investment income annex, and there you're just filling out the papers. For example, if you have a German broker, then every line is declared by your broker. For using a foreign broker, there's also almost always information how to declare it. Some specialty for crypto investments, you have to go into the Anlage SO. It's for miscellaneous income. But how is the taxation of cryptocurrencies in Germany? And there's some specialty in it because cryptocurrencies are, for example, a little bit special. If you held your cryptocurrencies more than 1 year, then they are completely tax-free. That's a very good thing because after 1 year you can say 1 million, 1 billion or something like this, it is tax-free. Under 1 year, you have to tax it with your personal income tax. That means not maximal up to 25%, so up to 45% if your gains are over 1,000 euro per year. This is a minimis rule, you have to know about it. For short-term sales, it means speculative private transaction. But there are also some specialties you have to know. For example, if you move to Germany and want to have it the tax easy way, then you can say, okay, I open a German investment account. I submit my so-called Freistellungsauftrag. It's your tax-free allowance. You can give it to the bank, and then you can track your, for example, all your foreign investments income in a statutory report. And you already have to be aware of double taxation agreements with your home country. So in the most cases, if you're from abroad, it's also very good to have a tax advisor from in Germany, because then you don't have any problems. Do you have any more questions? Then keep it up in the comments below. I wish you a happy new day. If you're looking at this at in the morning or in the evening, just have a good night. Bye bye.